Nothing like trying to do a live show when your audio connections are not plugged into the correct holes. Anyway, Charlie, my man Charlie, how are you?
I'm fine, as far as I can tell.
Right on. I haven't talked to you in a few days. How you been?
Yeah, let's see. Hold on a second. I will be telling you in a minute. I've just been working like a mule in a mine, trying to figure out how to do a better show. One of the things that I need to learn how to do is set my levels as well. So
yeah, we got to get you a real mic and a real console, and one of these days we should do a show together so it would sound like we're in the same room.
Yeah, I just want to tell you though. I think we were able to regain our top 10 spot.
I saw that
for the top.
Yeah,
that was remarkable.
Yeah, we have been consistently in the top 10 for the past 3 weeks, I think, and I think we're gaining a little bit of following. Got a couple of emails and notifications here and there that people have been joining. So this is awesome, So we're going to be reaching out to more sponsors. Unfortunately, Heine Winery has, they've been taking a hit lately with their involvement in the crypto, and I think they jumped out too soon, and they kind of lost their Heine on the last one. They'll be regaining a little bit, but until then, we're going to be looking for some more sponsors. So, I woke up yesterday morning and I'd put in a sell order and it sold, and I put in a buy order and I bought, and I made a couple of dollars the last couple of days on Bitcoin. I don't know if you've been watching it, but man, it's been going up and up and up and up. I thought we were going to crack 12,000 there for a minute, but hasn't really.
Well, you had a $1,200. He had a $1,200 gain today.
Yeah.
At one point.
Yeah.
I think it settled at 900. But
I've been following. I've been bouncing here and there, and did some trading. Bought a little bit more Ethereum. I think that's going to be going pretty well. I got a little bit of a stake in Tron. I keep hearing about that thing. I don't know what it's going to do, but I still got a couple of ICOs that haven't matured yet, and waiting on those. But boy, if they could only do what Bitcoin's done in the last 6 months, it'd be awesome. Anyway, so we brought our good friend Dylan Stokes back. Dylan Sherry. That's what happens when you look at things and you're dyslexic and you see two names and you put them up on the screen together. Man, Dylan Sherry, how you doing, buddy?
Good. I'm glad to be back, and I've been listening to the shows and intermittently talking to Charlie about what questions to ask and where to go with the show. So glad to be back.
Yeah, and you brought a historian of this ancient history of crypto. So the ancient back in the day, old school crypto. Back when we had wooden floors and dirt floors and had to go outside. Phil, how you doing?
Doing great. Good to be here.
Right on. So,
just to give some background, Phil Stokes. Phil, you're an IT consultant, correct?
That's correct.
Hello?
You choking on a coin there?
Yeah, still here.
Okay, you're good. All right, Phil. So, Charlie, what did you say?
Oh, Phil, your background has been in IT. Is that correct?
Yes. I've been following Bitcoin for a number of years, and it's kind of amazing the number of transitions that it's gone through. And I think people kind of lose sight of in this day and age, where mostly we're talking about prices and everything.
Well, that was going to lead, if everybody else is okay with this, I was going to lead in with this question. Quite honestly, you're quite right. All I've been looking at is the price. And it's a very arcane subject. Cryptocurrencies in and of themselves are just an arcane idea or notion, and the background and the mechanics, in some ways that you almost have to have a computer science background to quite understand it fully. But for our audience that isn't that well connected with that kind of subject matter, tell us who started it, what were the entities that started cryptocurrencies, and why did they need or felt the need to begin with this technology?
Well, that's what's very interesting about Bitcoin is that no one actually knows who created it. It was created by an individual named Satoshi Nakamoto, which is more than likely for an unknown person or a group of people. What's known about it is that this anonymous person or group of people posted on a cryptography mailing list in, I believe it was 2008 for the first time. And it's regarded that it was in direct response to the financial collapse, probably in the United States and Europe in 2008. And around 2009, the actual coding began and the network was launched. And some of the people on the cryptography mailing list are known. They did contribute to the project. A couple of them have died. The names there were like Hal Finney, and I think some of the other cypherpunks were people that were involved in it. Super technical people that were also involved in development of cryptography and were really focused on like privacy and emerging technology. So that was the genesis of Bitcoin. It was thought to be anyway a direct reaction to what they perceived to be like a Big Brother type state and its connection to the financial world.
So I know I've heard a lot of people say that it was quite an eclectic group of people. There were drug dealers. There were kids who were just basically fooling around with their own computers or with networks and circuits. It was there is no one group like you were saying, but the decisions are made by consensus. That if specifically with Bitcoin, that there's somehow a group think that comes together, not a group think, but some group that comes together or somehow electronically comes together and creates the decisions or comes to the decisions that are needed for Bitcoin to proceed. Is that an accurate way of looking at it?
Yeah, that's pretty accurate. Really, the technical underpinning of it is it solved a problem of trust. In our current systems, we always have to trust another party with a financial transaction or with a shared secret, such as a credit card. Any financial transactions we do today mostly involve an implicit trust in the banking system. However, the goal of Bitcoin, and it's regarded as somewhat reality, is that you don't have to trust anyone in this network of people. No one is a central arbiter. No one can say that this transaction is not going to happen, or reverse your transaction, something like that. So the technical name for that problem, I believe, was the Byzantine generals problem, also known as the double spend problem. Usually if you have a digital commodity of any kind, a file or a book or anything, you can just copy it, make as many copies as you want. So obviously that they didn't want that to happen, where money that you could just copy freely would be useless. So that's where some cryptography was invoked. And the idea basically is that anyone who makes a transaction first needs a key to make that transaction, which is essentially proves that they have a balance, and then they need to sign the transaction, which means that they're in fact doing the transaction, and then everyone else in the network says, well, that's valid. It's required that everyone, or a certain number of people, validate that transaction on the network, which is kind of why Bitcoin takes a long time to make a transaction.
Right.
Yeah, I've
but
noticed
really
that.
the idea was pretty radical.
I noticed that myself, because when I go to buy a coin or make a transaction myself, I'll put my money in and I'll wait 45 minutes, sometimes over an hour, and it still hasn't landed there. It makes a lot of people nervous. Is that, and we're hoping that that speeds up sometime soon. Do you see that happening?
You know, it's funny you mention that because that actually segues into sort of one of the most pressing issues of Bitcoin and other currencies, cryptocurrencies right now is transactional capacity. You know, how many transactions can be done on these networks? It's absolutely limited. Right now, Bitcoin, I believe, is limited to approximately 3 to 4 transactions per second, which is quite a low limit.
Wow, with all the people in the world buying that. That's crazy.
It's really low capability. Now, the thing is that you have to remember is that probably 90 to 95% of so-called Bitcoin transactions actually are not transactions on the Bitcoin blockchain. Say if you purchase some coins on an exchange, there's not actually a transaction that's settled on the Bitcoin blockchain. It's merely just a balance is incremented at an exchange site that you're using. So that's what's allowed this tremendous growth of Bitcoin, despite the fact that the transaction capability is fairly low.
Yeah, because you would think that with as popular as it's getting, that they would make some kind of development changes that would make the transaction speeds faster, and there would be more opportunity for other people to get in to get, you know, to make this happen.
It's funny you mentioned that. That segues actually pretty well into sort of the current landscape. I don't know if you guys have heard about the Lightning Network at all.
Lightning Network? No, I have not.
Lightning Network is a project that was launched by a corporation called Blockstream, and Blockstream, not by coincidence, is a company that's basically taken over the mainstream development of the Bitcoin software. And there's no proof of it, although there's reason to believe that the Blockstream Corporation has deliberately limited the capacity of Bitcoin in order to force people onto this, what's called a second layer solution, which is the Lightning Network that's being built on top of the Bitcoin network. The Blockstream Corporation got $75 million in investment, and they've steadfastly refused to increase the capacity of Bitcoin, which is what resulted in a huge amount of drama and what's known as the scaling debate, which has raged for about 4 years in the technical circles. You know, you've probably heard some keywords such as segregated witness and the block size debate. And the culmination of it was last October 17, there was an alternate fork of Bitcoin launched known as Bitcoin Cash, which increased the capacity of Bitcoin 8-fold.
Well, why didn't
Bitcoin Cash has a 24 transaction per second capability, which is, you know, really why, you know, personally I believe that that's a currency that's going to have some growth potential.
Now, why did that not match the price of Bitcoin whenever they split off? If it was a split, why did it not match the price?
That's interesting. There's a couple theories on that. The main theory is that the value of Bitcoin versus Bitcoin Cash correlates to the amount of mining hash power that's dedicated to it. So Bitcoin, for example, has around 20 exahashes of mining power that's dedicated to it. Bitcoin Cash has around a sixth to a seventh of that capacity. And the price, in fact, is, or maybe it's an eighth right now. The price roughly correlates with the amount of mining power that's dedicated to it. 20 exahashes is, you know, roughly the equivalent of, you know, 15 hydroelectric dams around the Earth running constantly.
Oh my gosh! Wow! Wow!
A huge amount of electricity is being devoted to this.
And that's why whenever, I've seen these little ant miners and things where you could buy these little devices to put on your computer to mine Bitcoin, which they actually don't. You can't turn a profit with those because it costs so much money to run the electricity that by the time you earn a portion of a Bitcoin, it's cost you more in electricity, right?
Precisely. That's generally the thing. Although on the flip side, generally someone investing in Bitcoin mining is someone that believes the price is going to go up. So, even a year ago, someone who was running one of these miners was running at a net loss because the Bitcoin was only worth $1,000. Of course, if they waited 6 months to a year, they could have sold it at $10,000 or almost even $20,000. So really, majority of people that are investing in mining operations are planning on future gains of coins.
So they're not going to see a gain right now. They're planning on when the price of Bitcoin goes up, that their mining abilities or capabilities will pay off then.
Exactly. And the mining is kind of an interesting thing too. There's a mathematical principle behind it. Bitcoins are only issued at a certain rate. It's a rate of issuance. And no matter how many people are mining it, the same amount of coins is emitted roughly every day. So the more people that mine, the more difficult it becomes. That's
really?
called a difficulty adjustment.
Okay.
Right. So that's why you can have this tremendous amount of electricity being dedicated to the mining of this, yet there's still the same amount of coins that are coming out every day.
So is that's it's
employing...
counterproductive then for everyone to create these little mining computer things? Is it counterproductive for everyone to make money?
It's an interesting thing. Again, Satoshi, the inventor, in a way, he had a brilliant idea. He incentivized greed for coins, and as more people mine the coin, in theory, the coin is harder to counterfeit, and transactions are harder to cheat. So what he did was he incentivized the greed of getting the coins in order to ensure that the network would always be secured by the miners. When the miners mine a transaction and a block, what they're doing is they're validating all the transactions of everyone on the network. Logically, they're expending their work. They should be paid, which is why they receive what's called the block reward, which is a certain number of Bitcoins that you receive every time a block is mined. And what Satoshi did, however, was the block reward decreases over time. So the first Bitcoin blocks that were mined, there was a 50 Bitcoin block reward. Right now we're at a 12.5 Bitcoin block reward. So, ironically though, the 50 Bitcoin block reward was only worth, $5 initially when the Bitcoin now 12.5 Bitcoin block reward now, you're talking about, well over $100,000 at today's prices.
Wow.
So it's you can see how the people have been incentivized to just keep mining. You've got operations out of China that are mining Bitcoins. It might be a 100,000 square foot warehouse just filled with racks and racks of these mining machines.
I did see something today on a Canadian mining company.
Canada is coming up really fast right now because China is in the process of basically getting rid of all Bitcoin operations. So
really?
People are kind of scrambling. Russia, Canada, Iceland, countries with surplus electricity that are regarded as, somewhat reliable governments are the main targets for, and obviously rural areas, because you can't be using up all the electricity in a city. That's just, and it's going to be too expensive. So people, in some cases in China, the mining operations were right next to a hydroelectric dam, like you could see the dam from the mining.
Dylan, I think you wanted to add something before we cut you off again, buddy.
Oh, no, I was just wondering whether the power generation companies are just loving this, you know.
Absolutely, absolutely. The other people that are loving this whole hardware boom is the Bitcoin mining manufacturers and the video card companies. I don't know if anyone's taken a look at NVIDIA stock. As far as I know, it's gone through the roof. Basically, you can't even buy a high-end video card over the counter at an electronics store or anything right now. Everything is back ordered just because of the demand for cryptocurrency mining. So there's definitely some winners in that space. The mining manufacturers in China are I think are billion-dollar companies at this point.
Yeah, you know,
one of the things we. Oh, go ahead.
I'll say that I got this thing called MinerGate, and it's like an app that you put on your computer, and I think it was developed primarily for PCs, because I have a super powerful computer. I have it's a Mac. It's a super powerful computer, and I've got a really powerful GPU. However, this program MinerGate does not access my NVIDIA card. It won't access it, even though it's one of the higher end NVIDIA cards. And it was just kind of bummed me out, because I'm going, wow, what would happen if I could actually access that power? If it would turn a profit for me?
Unfortunately, it's really tricky to do the mining. The way the mining with the GPU works is it's an embedded environment that you have to download and install. It's basically a parallel processing environment. In the case of NVIDIA, that's known as CUDA, C-U-D-A, and with the ATI cards, it's an OpenCL is the rival competitor in the space. So setting your system up for mining, it has been streamlined somewhat, but it's a huge job. In fact, miners are regarded as some of the biggest geeks in the space. There's the developers, obviously, are pretty deep into cryptography. Miners are generally people that are tech, nerds that, are experts with Unix and, compiling software, networking, security, because all those things are kind of required to, you have to be very careful mining that someone doesn't steal your coins. And aside from which, you don't want to blow a circuit in your house or start a fire. All the things that happen quite often when people are getting into mining.
Yeah, it says right here, I got this article up from investors.com, and it says NVIDIA ranked #1 with the Big Cap 20 in the IBD Weekly at the dawn of 2017. The IBD ratings were spectacular, a 99 composite, 96 for earnings per share, a 99 relative price strength. At the time, this market value was nearly $72 billion. And it shows kind of a little graph here going from March 2017 and just a steady rise, and it's projecting through March of 2018. But it doesn't really say anything here about about this relating to Bitcoins or anything like that. But you can definitely see a huge rise in that stock in NVIDIA.
Absolutely, absolutely. I think, the tech sector in general, I think, has been bolstered by cryptocurrency and the fintech industry. The level of investment is unprecedented. The joke is pretty much on a prospectus or a term sheet. If you just mention blockchain, everyone's going to go crazy. You've got John McAfee pumping stuff online like a madman.
Yeah, what is he? Who is John McAfee? What is this character all about?
John McAfee is a colorful character. You'd probably be foolish to believe everything he says, but he's also very intelligent. He's the inventor, basically, of antivirus. And then he was made millions of dollars selling the McAfee antivirus company about 10, 15 years ago. And then kind of traveled the world doing a ton of drugs and getting in legal trouble. And ended up, I think, hiding out in Costa Rica. So he killed his neighbor in Costa Rica. Believe something like that. Yeah, right. And then he ended up killing his neighbor down there, and he's been on the lam.
Oh my God!
But I think he got away with killing the neighbor, and now he's back with some huge investments in cryptocurrency.
And we've all overlooked that because he's making some people money.
He knows his stuff, I have to say. I mean, he's one of the people that you kind of love to hate because more than often he'll deliver some bad news. And he's heavily involved in sort of pumping and dumping small scale altcoins that I'm sure you guys are familiar with.
Yes.
Yeah.
But nonetheless, he's also involved he's opening up a big mining operation. Also, there's a Japanese mining manufacturer. I can't remember the name of the company offhand. They're making some inroads in developing some really small dies for some of the mining equipment. It's all, as you guys know about when you're building processors, you're always trying to build on a very small die, like an 8 nanometer die, 12 nanometer, I think might be sort of the cutting edge. The smaller die it's used, the more efficient the machine is, therefore using less power, therefore producing more coins for a lower cost. So there's kind of a hardware tech war going on, for the best optimized mining equipment for cryptos in general. So also an area of huge growth, huge volatility, a lot of people making millions and or getting wrecked completely.
Now, what about using solar power to power these gigantic machines? Is that, I mean, that just seems like, why isn't that happening? Or is it happening?
It's conceivable. I think, unfortunately, people are just looking for, the absolute biggest pipe. We're talking, megawatt, type power draws. And it's actually kind of sad that Satoshi, the original inventor, he did foresee that originally the mining was just people in their mom's basement. One or two guys, running a couple of video cards. You could even mine Bitcoin on a regular computer. And then, unfortunately, Satoshi did predict that it would become centralized. Really, for an individual to be mining Bitcoin is almost pointless at this point. You get such small fractions of Bitcoin. However, there's plenty of room for entrepreneurial miners in other coins.
Which
is also another reason that you're going to be seeing, I could name a handful of altcoins that I think are particularly interesting. Of course, you've got your mainstream Ethereum Litecoins. Those are sort of like, your mainstream traded coins. Personally, I'm interested in Bitcoin Cash. Monero is a privacy-oriented coin that I think has a bright future. Obviously, again, not investment advice for anybody out there, but nonetheless, super interesting technology that I think has a lot of growth potential. And the mining, as I say, is accessible to a lay person.
Folks, let me just do a little bit of bookkeeping here. We are speaking with Phil Stokes, an IT consultant and an historian of cryptocurrencies. He is a good friend of a special guest of ours, Dylan Sherry, who is also a mathematician. And these two gentlemen have given us a great insight into cryptocurrencies, or a greater insight than certainly I had. And that I can't speak for Dean, but I can only speak for myself. And I'm just mesmerized by what you're saying, Phil. But just to admonish folks, we are not advisors. We are not in any way recommending that any of these be investments, because we are not investment advisors. This is purely an educational channel right now, and we are there to try and get you as much information as widely dispersed as possible. And we're very lucky and happy to have Phil Stokes with us at this time. If you guys, if everybody's asked the questions about the computer science, can I ask a question about economics and finance? After listening to you, Phil, it seems the first question I would ask is, where's the inherent wealth? Let's say, for instance, in a cryptocurrency. Before, fiat currencies used to have gold or silver backing, some kind of a precious metal that could have was stockpiled somewhere in some vault, some official vault, and people could sit there and say, well, whatever currency we produce, that's paper currency, has a certain amount of this, precious metal backing it. But it seems to me that the actual backing of, for instance, let's say, for instance, Bitcoin or any of these cryptocurrencies is the amount of energy that it's required to create them in the first place. Is that accurate?
That's absolutely a factor, yes. I mean, and what you have to realize is anyone that's mining has skin in the game, like we're talking about. These people have invested millions of dollars, and chances are pretty high that they're keeping the price up as well. In other words, by not selling the coins that they mine at a low price, possibly even buying their own coins on exchanges. There's a number of ways that, this is an unregulated market, so there's a number of ways that the price can be kept high. The exchanges can collude to keep the prices high. There's a number of factors there. As far as the intrinsic value of it, honestly, it could go to zero. For example, if Bitcoin were hacked, someone discovered some type of vulnerability that, highly unlikely. However, if someone were to find a vulnerability where they could simply steal the coins, it would absolutely become worthless. Fortunately, we do have 10 years of audits and basically people just trying to hack it as much as they can, because there's a huge incentive to hack this software. And the other thing that does give Bitcoin intrinsic value is you guys are familiar with the network effect, which is basically is the number of people using something creates a utility of it.
Oh, I see. Yeah.
Just as cash does. If no one accepted U.S. dollars, they would become worthless. Obviously, U.S. dollars are used around the world, so that, there is a type of network effect. Now, Bitcoin, of course, is a totally new concept, and that's probably what's been driving some of the rapid increases in value. Is just the sheer number of people hearing about it, getting interested, wanting to do something with it. And every time you add, imagine if the stock market, the number of people investing in the stock market increased 20-fold in the next year. Well, the stock market will go insane. I mean, because all that 20-fold increase of people, they're all buying. They can't sell if they're not even in the market. So it created a tremendous buy-side pressure, I think, and also contributed sort of in a circular way, contributed to that network effect. Not only did 20 times the number of people get involved in the currency, but they're also mining it and validating the transactions, maybe using it to buy and sell things, et cetera, et cetera. So that would sort of explain, the rapid growth of it. But then as far as intrinsic value, really, if you're buying any cryptocurrency at all, you're investing in a concept. Just like in the late 90s, someone who was investing in internet tech stocks was buying into a concept. Amazon or whatever. No one really even understood what Amazon was going to do. So that's really sort of the fundamental, what you could argue would be, intrinsic value that's being created.
That's such a great point that you made, Phil, because as a novice, and I certainly am a novice, and maybe even more accurately, an agnostic towards this type of new currency.
He hates it.
I don't hate it. I don't hate it. I mean, I don't hate. I'm a loving person. You know that.
No, you don't hate it. You just.
I don't despise it. I don't hate it. I'm very cautious, and I'm very. I've seen a lot of different things. I used to be an accountant. I've been an accountant since the '80s when I first got out of college, and I was bright and bushy-tailed, and the market and the world beat me down into what I am today. But what you just said, Phil, just hit me as something that I first thought of one of my first thoughts when I was introduced to this by, told to look into it more deeply by Dean was there's a lot of PR here. There's a lot of more PR and marketing and promotional, aspect that's driving this price or driving these values. And I know I told this to Dean earlier in an earlier broadcast. It reminded me a little bit, more than a little bit, of the penny stock markets. The pink sheets that you don't have a certain. There's shell companies that don't really have any value to them, other than the fact that they are there and they're able to, pump out a lot of marketing. And that's the first thought that that came to my mind, being naive and sort of ignorant about this whole thing. And yet, you're basically telling me in a way that you're investing in something that you may not understand, but it's conceptual. Just like we didn't quite understand the .com phenomena as well.
Absolutely, but as a word of caution, unfortunately, cryptocurrency has attracted exactly those types of people that are just absolute scammers, fraudsters, slip talkers, literally of the altcoin market and Bitcoin as a whole. The whole cryptocurrency market. A low estimate would be 99% of those coins are scams. I mean, it literally, you're looking for a diamond in the rough here. The majority of coins, particularly ICOs and token sales, in my opinion, are absolute scams. I wouldn't touch any of them, even if I could make money, because you can. That's the sad part. But really, if you get into that whole realm, you're just dealing with the greater fool theory and people getting overhyped on a concept and just sort of blindly jumping in on some dumb tip they received on Twitter or, some random pop-up ad they got here or there. Absolutely have to be super diligent in this market, and there's really, literally, just a scam is born every minute in this scene. And it's pretty sad. Now, the flip side of that, people will tell you, I didn't even know this until I became involved in the crypto scene, is that your average Joe can't invest in a company. You have to be accredited. You have to register with the SEC.
Right.
Even if you had $50,000 that you wanted to pump into a cool company, if they're publicly traded, they're a registered corporation, you have to go through a due diligence process, which essentially rules out the little guy. You've got to be a millionaire and up to invest in a company that's going to go to IPO. And that's really not fair.
No,
to an entrepreneurial-minded person that's, maybe doesn't have a big inheritance or pocketbook. So that's actually what is regarded as one of the biggest innovations of the cryptocurrency market, is that it does allow the little guy to get a seat at the table. Now, of course, your typical financial person will say, well, there's a reason that guy didn't have a seat at the table, because, it's like sitting down at a poker table in Las Vegas, knowing nothing about how to play the game. You just immediately lose everything. So there is that. So, there's tremendous opportunities for gains and losses. But also, it is a moment when the whole concept of investment and money and exchanging value with people is being changed by this technology.
Yeah, you were saying earlier about the price of everything because of how many people are using it, and over the last just couple of days, the market cap on cryptocurrencies has gone up $100 billion. Because just a few days ago it was in the 400 billion. Now we're at 502 billion. Creeping, it's slowly growing up, and if you've been watching Bitcoin over the last 3 days, it's been on a nice steady incline. And you match that with almost every currency on the top 100 here. You can see it. I'm on CoinMarketCap, and if you look at the little graph over here on the right hand side, they almost all of them match up exactly to what is happening to Bitcoin. And if you look at the stock market, that typically doesn't happen now, does it?
No.
There's a close correlation with Bitcoin. Generally, Bitcoin is the most liquid and readily exchangeable into fiat. So people that are investing in altcoins typically don't buy them for tax. They're buying them for Bitcoin. So there's sort of a secondary exchange market that's happening. So it's almost as if Bitcoin were like a reserve currency, and maybe all the other alternate currencies are like foreign countries or lesser currencies. We are starting to see some decoupling because Bitcoin is no longer the dominant cryptocurrency in terms of transactional volume. 3 times the amount of transactions occur on the Ethereum network every day than do occur on the Bitcoin network. There's a couple other challengers that are rising very rapidly in terms of their transactional volume. So there's definitely some big changes going on with that. I did want to just briefly caution you on the market cap metric. It's a metric that was basically taken, I believe, from the stock market as a way to value companies.
Exactly.
The problem with using a market cap with a cryptocurrency is that they're merely multiplying the current strike price of the currency by the total supply of coins. So you can see how this market cap metric is being gained by some of these altcoins. Let's say maybe even, some of these smaller currencies have a huge supply, and then the currency is selling for $1. Someone can go in and merely spend, $10,000 at an exchange and ostensibly show a coin having a market cap of $1 billion. So, that's an extreme example that I'm giving you, but there's not actually this much money invested in this space.
Wow.
They're saying a 500 billion market cap. We don't know exactly how much physical fiat that's going to correlate with, but it's definitely not anywhere near that amount.
Huh, okay.
It's funny.
It's just a cautionary thing,
Yeah. I appreciate that so much, Phil, because not just because it's sort of underscoring my bias, but the fact is that that's kind of the way, a lot of stock markets work, or a lot of, I'm not going to mention what companies or whoever, that's not important, but a lot of companies, in fact, invest in their own stock. They buy back their own stock. They can borrow money at a very cheap rate, go into the market, support their price, jack up the value, and gives you the sense that the company is worth more than it actually is, simply because we look now at stock price. We don't look at things like production anymore. It's funny. I'm of the age that I remember when I used to watch news with my parents, and the news used to talk about things like, General Motors or one of the big 3 auto companies putting on a second or third shift, steel production. They would talk about material things that were being created in this economy, and then all of a sudden it just became the stock market is the arbiter and the actual scoreboard that we have to look at everything. So if you can game it, if you can manipulate it, you can make it seem as if things are better than what they actually are. And in a way, what you're explaining to us, Phil, is sort of the same kind of game being played here as well.
Absolutely. In fact, even to a greater degree, because there are regulations. Of course, we know people are doing, insider trading and, the backdating the options and doing all those kinds of things. Those things, however, are technically illegal. In the cryptocurrency market, there's no such thing. So in fact, that's one theory of why Wall Street is so intrinsically involved in these crypto markets, is because all of the dirty tricks that were made illegal over the last, let's say, the intervening years between 1929 and now, all those techniques can be used in the cryptocurrency markets. You hear rumors of wash trading, which would be, as you say, just simply buying your own orders. The order books being rigged on exchanges. What are these exchanges, while we're on that subject? If anyone using an exchange, you're trusting this website with your money. And believe it or not, it's likely that they will simply disappear. It's just not a matter of if, it's a matter of when. This has happened literally 20, 30 times in the less than 10 years that Bitcoin has existed. The most famous ones are Mt. Gox and Cripsy and Bitfinex, and a couple of these guys have ended up in some federal prisons and God knows what. The problem is nobody knows where the money went. That's gone. And so that's another thing that I want to caution you guys about is there's sort of a maxim in the cryptocurrency scene is you always hold your own coins. That means you never trust an exchange to hold your coins for you for a period any longer than you need to just make your trades and then you sort of get out. And you never want to leave large amounts of coins on an exchange for any extended period of time. You always want to keep those yourself on your own wallet with a secure passphrase. It's really difficult. It's a full-time job to keep your coins secure in this market, and there's no consumer protection of any kind, no insurance, and there's no reversibility of transactions either.
So
you send some bitcoins to a wrong address. If you mistype an address, it's literally gone.
Wow!
You'll never see it again. So it's that easy.
Now
you're working with a $5,000 transaction and you misspell an address, it's gone just like that. Poof.
Now, when you're saying there's different kind of wallets, and I know I've seen some people that have like a wallet that's connected to like an actual key ring where it's like a USB drive. Can you talk about those?
Hardware wallets have a really good reputation on the scene. The main thing to warn you on that, however, is never buy on eBay or any kind of a third-party source. Always buy directly from the manufacturer, because there have been cases of hardware wallets having a backdoor or the secret key being compromised.
Oh.
And then, an unsuspecting buyer buys the wallet and only to have his funds drained out a few hours later.
Really? Okay.
So there's sort of some nasty tricks. Getting hacked, too, is a huge thing. I mean, anyone who's really trading, let's say over 10K in these currencies, I almost would recommend you have a separate PC just for the trading, because you're getting on porn sites, you got some kind of malware, you're running some software that's cracked, or you just get a bad deal. You just get hacked. You get an email, you get phished in your email. There's so many ways to have your security compromised on a typical Windows or Mac PC or Linux, for that matter. If you really want to be serious about investing in this space, I do recommend just a separate PC, and of course physically secure that as well. I mean, there's people being spied upon on Twitter talking about cryptocurrencies. Next thing they come home and all their computers are gone out of their house.
Wow.
A guy recently, a guy in New York City was pulled into a van and extorted for his Bitcoin private keys at gunpoint. There's crazy stories every day. What people will do for money, I guess, is the logic.
Oh my God!
So nothing changed as far as human consciousness continues at its own crazy. In the same old frenzy, is all this genius is Satoshi, and has kind of gotten isolated or perhaps even lost amongst all the frenzy and the scams and the.
Yeah.
Do you think there's any other cryptos that are trying to adhere any closely or more closely to the original white paper outlines?
I'm glad you asked that, because that's why I'm such a firm believer in Bitcoin Cash. Bitcoin Cash, it takes more abuse than really any other coin online. If you read blogs and forums, people hate it. It's because it spun off of the original Bitcoin. Unfortunately, the original Bitcoin was compromised by the Blockstream Corporation. So, in fact, that's Bitcoin Cash's biggest selling point. If you're adhering to Satoshi's original white paper. The white paper is a fairly technical document, but the title of it is A Peer-to-Peer Form of Electronic Cash, or the subtitle, I should say, which essentially is what Blockstream was absolutely deviating from. They were limiting the capability, introducing a second layer solution, none of which Satoshi ever mentioned. And so that's why the Bitcoin Cash people, they actually removed some features from the Blockstream version of Bitcoin that were that were actually counter to Satoshi's original vision. And first and foremost, they increased the capacity eightfold. Satoshi himself never implemented any transactional limits to Bitcoin. That was merely added in, I believe it was 2014, because there were some spam transactions that were slowing down the Bitcoin network, and there was a concern that Bitcoin would sort of buckle under. Also, there was sort of another piece of history. There was a site created called Satoshi Dice, which was just a genius site. It was a provably fair dice rolling site where you could gamble small amounts of Bitcoin, and it just basically spread like wildfire. And I think the founder of that company actually he's now the CEO of Shapeshift, which is another highly successful Bitcoin exchange. If we're running out of Panama.
I think I have one of those. I think I'm on that Shapeshift.
Shapeshift is an excellent site because you can exchange any coin for any other coin without creating any account. You just simply do your transaction. It's an amazing concept. It's again, you have to be very careful because you don't want to mistype anything.
Let me interject. We are speaking with Phil Stokes, an IT expert, but also an historian of cryptocurrencies who's been keenly watching this technology and market for, I guess, the better part of 10 years now, right, Phil? Would it be fair to say that?
I think I got in around 2013 and just became really interested maybe the following year and really started doing my homework. That's one other thing I want to stress to your listeners is if you're ever interested in cryptocurrency, you can't know everything. So, but I do encourage people, if any coin that they're interested in, the first step in the process is doing the tremendous due diligence. You really have to read for weeks, months, years about it.
You let me in, or that's a great segue to what my question is. We're always told to do our due diligence, but if you're a novice, such as me, it's very difficult to start the due diligence process if you don't know where to start, if you don't know where to begin. It's a big difference. Like, for instance, for me, who used to work as a CPA and work as an accountant, to know what to look for in a financial statement because I was around them so much. So I had some access or some knowledge or awareness of where I should look and what should I. But with but cryptocurrencies, where does a novice even begin? Where would you start? It seems such a vast. You have these two words, crypto, which basically talks about cryptology and computer science, and then currency, and the idea of what money or the functions of money and where the value comes from in a currency. So it seems as if you have almost a need for an encyclopedic understanding before you can even begin to do any transactions with this new technology. But where would you begin? Where would you recommend a guy like me to start if I wanted to actually become involved in this type of new technology?
It's a big learning curve. You're absolutely right. It touches so many different aspects of mathematics, computer science. It's very geeky. Cryptocurrency is a nerd realm that has been overrun by financial types. So it's very interesting. I mean, let me give you an example. The first steps that I go to when I'm doing sort of the due diligence on a coin is, how is the coin mined? Now, you can come to some startling conclusions. For instance, Ripple is not mined. Ripple is a currency with, I can't even remember, a $50 billion market cap, something like that. Huge. And Ripple is not mined. Ripple was pre-mined. It was created by a single corporation and then simply sold as a token. Just like if I were to send a spam around an email and say, hey, who wants to buy a Willy Wonka widget? And amazingly, people did buy it. However, there's no logic to that. That makes no sense. In fact, to the sort of nerd and geek community online became infuriated when Ripple started to gain this tremendous gain in value, because technically it's not even a cryptocurrency. Ripple is a token. It's a electronic token that was generated by a corporation, a single entity. They control the entire supply of it. And recently the Ripple Corporation pledged to escrow, I think it was billions and billions of these tokens in order to increase the value of the token. But again, this is totally based on trust in a single entity. I mean, this runs completely counter to the whole purpose of cryptocurrencies. So Ripple is a sort of a shining example of what happens, you know, when there's sort of this irrational and exuberance and just ridiculous growth with really no underlying technical fundamentals, at least as far as a technical person is concerned. Now, that said, Ripple is bonded, I'm sure, and they have millions of dollars in investment. And the last thing they would want to do is all of a sudden release a bunch of these coins into the wild and completely tank the value and, you know, completely destroy their entire business model. So they do have that incentive to not mess up a good thing. But nonetheless, Ripple is completely based on trust, and, you know, I just wouldn't ever touch it with a 10-foot pole. That's just my own opinion. But nonetheless, you know, that's why I say you have to have these starting points from my perspective of, you know, you need the security of the mining, and the distribution of the coins has to be at least somewhat equitable. If one corporation holds...
Sounds like Ripple is an attempt by banks or government to just capture the attention of people wanting to get into cryptocurrency without the due diligence.
That's a very good point. And in fact, Ripple, if you look at their history, I don't know the details, Ripple paid out an enormous settlement to the federal government. And they also have investment of major corporations, which again, coming from my perspective, makes them all the more suspicious. But they do have some traction with the mainstream banking industry. You know, they're trying to move forward with this token. That again, it literally could be shut down tomorrow by the feds, a government, you know, any agency. There's a central point of failure, and it's one corporation, and there's a CEO, and he can just say, "We're going to do this tomorrow," and you absolutely have to have complete trust and faith in that. And to me, that's exactly the opposite of the point of this whole thing. It's not centralized. It's not mined. It's not validated by a network of people.
Yeah, I would agree with that. And wouldn't you say that in terms of Bitcoin, the finite number of coins is also a limiting factor that prevents, you know, a currency being inflated or deflated or something like that?
Very good point that I forgot to make. I mean, that's also a major driver of the value of Bitcoin is the static supply, because as everyone knows, we're living in an age. I think it was the previous guest on the show, Andy Hoffman. Was that his name?
Yeah, Andy. Yeah.
Yeah, pointed out the debasement of fiat currencies has gone into hyperdrive. You know, at this point, you know, like you can practically watch a penny drop out of a dollar as you're holding it. You know, it's getting pathetic. So that's another driver of this whole market. It's just it's you know, fear. It's an exit. It's an attempt to hedge against the fiat system, which we're largely indoctrinated in and we regard as somewhat normal and stable. But I really, the more I've learned about cryptocurrency, the more I've started to question even basic concepts of the entire money printing machine, known as the Fed, the entire international financial money lending and pretending system, I regard as highly suspect.
Well,
we have spent. I'm sorry. Go ahead, Dean.
Sorry, I was just going to jump in here that we've had a gigantic jump in the last few minutes on Bitcoin. Just a few minutes ago, it was literally trading at $11,100 and something dollars, and it has just now jumped up to $11,380. Still climbing. I actually had a sell point in there at 11,205. I should have kept that sucker in there because it's on its way to 11,400 at the moment as we're speaking.
I would like to think that that's because of us, but you know.
Oh, I'm sorry, my bad. It actually has hit 11,410 as the all-time high in the last 24 hours. So it's actually come down just a skosh. And but it's still plowing up there. I mean, I see it just climbing like a monkey in a tree.
Well, you know, the funny thing is not the funny thing, but the interesting thing that we've done is when we first started this show, Dean asked me to come on and help host the show. So I started to do some research, and I went back to the 1980s, which was sort of my coming of age, and I remember full well the Reagan administration, or the Reagan Revolution, and how everything was going to be somehow made good again by just changing the tax laws, deregulating a few of the industries, and creating this trickle-down effect. But the first thing that got affected, or was affected, was the dollar. The dollar simply exploded in value. It went from about 85, and this is from memory, to about 130. And then, as soon as it came up, as soon as it hit that peak, within a matter of months, it crashed back to what its original value was. So the dollar was the sort of harbinger, or this signal, to indicate how tenuous and how faithless or feckless, actually, the monetary and fiscal policies of the country at that period of time. And it was only until I sat down and actually looked at the graph, when I started to do some research, that I realized, holy cow, this is not the currency of a country that had, or of an economy that's efficacious or stable. This is an economy, or a currency of an economy that's psychotic in a way, that's kind of lost track of, or is unhinged. And, the dollar continues to be, in my opinion, the best sign of economic health, or where the economy is, or where a country may be. And time and again, when I get people like Andy Hoffman, when we get experts like Andy Hoffman or you, Phil, they keep coming back to that point, that you are debasing the currency so quickly and so rapidly that you're lost. It's not just the citizens of the country that are losing faith. The people around the world are losing faith in this idea, the preeminence of the American economy that we all grew up believing.
Right. And I mean, honestly, too, that's what I've realized about Bitcoin. There's sometimes concerns are raised about the electronic or intangible nature of it. And I just realized the other day, it's the same thing as our bank balances and all this electronic transactions that we do every day. What is the difference? Our bank balance is just in our head. We get an email that says we have this much money. The money is not there. According to my research, there's only 1.5 trillion U.S. paper dollars in circulation. The more alarming thing, 1.5 trillion to serve this entire country? I mean, that's startling. That's only, several $1,000s a person. And to make matters worse, apparently 2/3 of the paper money is in foreign countries, being held in mattresses and in holes in people's backyards in foreign countries as a hedge against their hyperinflation. That would mean there's roughly only 500 billion U.S. paper dollars in circulation in this country. If that's true, I mean, I'm headed over to the ATM, guys.
Welcome to the world of fractional reserve banking. And, that's pretty much when you begin to understand how money is created. money is actually created through the process of debt creation. It's not the Treasury putting up a whole lot of dollars and putting it in your account or your mailbox. It's actually through the creation of debt. You borrow money through your credit cards, mortgages, student loans, which is my favorite, thing to beat down. But that's what it's about. It's all, as you said, it's electronic, because of course it's not the creation of that actual dollar. I mean, it's a loan, and somehow it gets deposited or wired into your account, and that's where it goes. That's what it is. But let me ask this one question.
The only way
I'm sorry, go ahead, Phil.
Go ahead, sorry. I was going to say, and then the only way the economy is sustained is that people have to work in order to pay the debt. So the labor is still extracted from the debt.
Okay, as my neighbor in San Geronimo would have said, "You're bringing me down, Phil. You're bringing me down." But you're bringing me down, man. You're bringing me down. But what is the future of this new technology? Where do you see it happening? Will it become much? Because I guess I have to admit that it is a novelty for most Americans. Not that it is, but in their minds, I think they would think of it that way. Where do you see the future going?
I have mixed feelings, and I'm sorry to bring it down. In some ways, that's good, though, these negatives, because we can do better than this, right? Unfortunately, I do feel like crypto is a little bit of a fad. And also, we've got an uncertain regulatory environment. Every time China announces this or that, or Russia says that, they just keep changing their minds every 5 minutes. And cynical people are saying, well, they're just doing it to move the market so they can buy or sell or whatever they want to do, So that's a problem. And, if we really do get to that point, sort of the geek's dream and Satoshi's concept was to actually challenge this entire fiat pretending lending system and debt creation for the whole world. That I don't think is entirely feasible. And I do feel like when it starts to have an impact on that whole fiat system, it'll sort of put it into convulsions, which we may already be witnessing. Recently, last week, whenever this little micro flash crash happened on the Dow, people were quick to blame Bitcoin for it.
Oh.
I don't think that's credible, but at the same time, if these things start happening, and the other thing that I think we'll start to see is if crypto really does start catching on, it won't be about the exchange rate between fiat and crypto, because people won't even exchange it. If it has a utility and a network effect, why would you want to exchange it, especially when it's going up in value? Economics, I believe, would imply that you wouldn't spend it. Unfortunately, there would be sort of a deflationary effect. But nonetheless, I mean, if cryptos do reach that point, I do feel like the regulators are gonna have to do something, or they're fired, right? I mean, this is their job, is keeping this shitbird flying. Pardon the French. So, I definitely, I feel like something will be happening with that. And also, I think that right now we're at a point where, hey, everybody wants to invest in something that gives you a 15% return in 24 hours. Of course they do. But at some point, that can't be real, What goes up must come down, I guess, would be the logic. And Bitcoin certainly did correct pretty hard in 2018.
Yes, it did.
Right. But we've talked about
just in general. I think that the genie's out of the bottle, right? You can't put her back in. So I think that's probably the good part of the whole thing.
Well, we've documented, or at least we've on earlier shows we talked about the fact that Venezuela is looking, and of course I keep repeating that Venezuela owns Citgo, which is a major petroleum distribution company here in the United States. It's an American corporation, so they're owned by Venezuela. They're looking into the use of cryptocurrencies as a way of exchange. UPS has done spent the research needed to put together a a patent in order to have their lockers using this type of new technology. There was a Canadian not hedge fund, the Canadian pension fund that has looked and is investing in cryptocurrencies. So there's this growing ratification or acceptance of this technology as a way of doing business, at least from some pretty large entities that you would think would do their due diligence. And it would seem to me, just as a novice, that is a way of ratifying the efficacy of what you're seeing with this currency, at least with some of these currencies.
Absolutely, and with the blockchain is a trustless shared ledger, and we didn't really get into it too much, but it absolutely does have applications outside of currency, such as medical records, any kind of confidential identification documents, any kind of chain of custody. Even, honestly, I've heard mentioned that the central banks are looking at using blockchains to replace their Byzantine settlement systems that they have. So when the Fed exchanges $500 billion electronically with BIS, and BIS, or the European Central Bank transfers money to the IMF, all these transactions go through a series of electronic systems. Even interbank transfers, all these things, they have their own legacy, old systems. They apparently are quite inefficient. I don't know the details of it. But, I mean, as you mentioned, you've got smart contracts. The rate of innovation is exploding in the whole blockchain space. As it is with most things, probably 9 out of 10 ideas either will just be deemed useless or just won't be implemented correctly. But nonetheless, I mean, the potential for that, I think, is, it's just driving a huge sector of the economy. Fintech is on the tip of everyone's tongue, in major urban areas all around the world. I mean, aside from that, too, let's remember, these systems are global. They're transnational. They're not run by any country, out of any country. And honestly, at this point, given the inertia that they've got, I don't know that it would be possible for any entity to stop them. It's almost like a steamroller just on the whole global information and financial technologies. So it's definitely an exciting time.
Well, it was very exciting and very, very, very educational speaking with you, Phil. I'm going to have to bid farewell, but this has been one of the more enlightening conversations I've had in quite a while. Will you be our guest again in the near future? Can Dylan rope you in and bring you back so we can have more conversation with you?
And Dylan, you need to be quiet on our next show. You talked way too much during this show.
Well, I thought I'd let Phil, share his large reservoir of information and expertise.
Yes, it was very, very good. I think that this is going to get a lot of listeners a little more education when it comes to what they're, what are you getting into? Why are you getting this space? Why are you getting into it? Just because somebody made a couple of bucks on it in November and December, and now everybody wants to jump on the bandwagon, but they don't know why. And I think this is probably one of the biggest reasons that we need to have these kinds of talks, is to be more educated on the fact that it's not a game, it's not the stock market, but it's definitely something brand new for a lot of people. It's not new in its conception, but it looks like a way that a lot of people could start making money at it if they did it smartly, if that's a word, smartly.
Well, it is now.
Yeah. I'm going to deem it a word. I'm going to make a token out of it, smartlytoken.com. And it was great, Phil. Thanks for being on the show.
Thanks so much, guys. Take it.
All right, so this has been a great show. You guys, please come back again next time. We're going to keep watching the stocks. We're the coins here and the price of Bitcoin as it keeps rising. I'm watching it right now for $11,410. Just keeps climbing like a monkey in a Bitcoin tree, looking for a Bitcoin bananas. All right, thanks, guys. For everyone here at the Crypto the WonderDog show, we bid you have a great day today and a better day tomorrow.